So you're welcome back to tonight's episode. Tonight I'm going to solely talk about order blocks. Okay. Alright, so what are order blocks? So basically, by my mentor, order blocks are areas where institutions frame their orders. Okay, so it becomes a point where the institutions and then the smart money is framing their orders either to buy or sell. Okay, so for instance, if the institutions begin to frame their orders, how will you identify it? And we are saying that you can identify it through order blocks. It is just one of the means, institutions can frame their orders using a lot of means, but one of the ways that institutions frame their orders and rally the market is the use of order blocks. How do you identify order blocks? Okay, so let's go to the chart and I'll quickly show you and then we'll be off. Okay, so we are on the monthly time frame on volatility 75. We had the market trading from a certain low to this point, and then it went all the way up. It went all the way up here. Okay, and then came down to this point, and then it went the way up. So we could see that the market was actually trending up. So when the market is trending upwards, it means that the market always doesn't move in a straight line, as people may say. Price is fractal. Price is moving in a zigzag manner. So when you have price moving down, up, down, and we call this point the highs. Okay, the highs. When it's moving up, all these areas are called highs. When you have price moving up this way, and we have the highs that it forms, the next high that it forms is higher than the previous high. We say the market is trending upwards. Okay, or we are in a bullish market. All right. So price trending upwards this way, and then suddenly it forms another low. Okay, so let me be more specific. I want to get your attention to this. Okay, it forms another low here, then it moves up from this high, and then it gets bounce off this area. Okay, it moves up high this way, it got bounce off this into this area, and then now it goes further higher into our original direction of the trade. Okay, which tells us that there was a structure shift somewhere in this area. Okay, now to be able to identify order blocks, I'm not going to talk about structures. To be able to identify order blocks, when you have a high, okay, when you have a high, for instance, like this. Okay, let me take off all this area, all the chart from. So for instance, you could see that if you want to put the picture in one perspective, you could see that it was the market moved from here to here, from this point to this point to this point, all the way, let's say, to this point, and came down to this point, and then reversed all the way up here. So you can have one simple bearish movement here. Okay, all the others you may consider them as you may consider them as short-term trades, short-term highs and lows. Okay, and then we have a market breaking down all the way this way. Okay, now consider this. You have a structure which tends to shift. Anytime you have a market structure shift, look carefully. That is where you will find order blocks. Or when you have a low, for instance, we were trading upwards and then we had the market breached downwards. breaking a certain low, you will likely find an order block inside this area. The high that actually was formed, that actually came to destroy the structure, that is where you are likely to find your order blocks. So one of the key things to note is that more often when there is a shift in structure, you are likely going to find an order block. You are likely going to find an order block when there is a market structure shift. Okay, perfect. All right, so let's go on. Now, we had a high here, we had another high here. So we could see that the market was still trending upwards. Now, the market breaks down. Ignoring all these short term, I'm taking them as short term lows. Ignoring all these short term lows. Okay, so you have high, low, high, or higher. Then we have lower than the previous low. Means that this one has been breached. So this low has been breached. At the moment this low is breached, we are looking for a setup that will help us run down. Now we are seeing that we can find other blocks, especially at places where market actually caused the break in the structure, or market caused a breach in the upward movement. Okay, where can we find such? Now let's look up here. More often when you have price trading down or breaking down, you may find it last movement upwards. This last bullish candle here that moved upwards after movement, which caused the sudden breakdown to take the structure as the block. So for instance, we have this candle here. Let me include the wick. This candle here is our order block. This last bullish candle that caused the breakdown of the structure is our order block. And which type of order block is it? This is a bearish order block. Why is it bearish? But the candle is a bull candle. It's a bearish order block because it caused price to rally down. It caused price to rally down. So it caused price to become bearish. So it's a bearish order block. Now at which point can we say that okay, it's a bearish order block, so we can make an entry? Now, here we go. There are various points in an order block where you can make an entry. Okay, there are various points. Now, the first point is just at the tip of this candle, which is the wick. The wick can be a necessary point of entry. So here we can have the wick as our point of entry, or we can have the body as our point of entry, or we can have the middle of the candle, or the middle of the candle, which is the body, as our point of entry. So these are the various points of entry on an order block. If you want to execute a trade on an order block, these are the various points of call to execute a trade. Now, I said we should consider the whole from the wick from this side to this point. And I said, so you can take a trade on the body, the whatever, but what of the wick itself? You don't always take into account the wick. Okay, you would only take into account the wicks when you have a premise that price has something to fulfill or has some liquidity to grab, especially when it is above the body. Perhaps it could be some liquidity pool just above it that it must run into. And even with that, if it forms, it may leave wicks. So for instance, a typical example here is with this particular bullish order, a bearish order block with this bullish candle. price, what price can likely do is, if price trades into this bearish order block here, it can go further into it. It can trade above here, but the truth is it won't stay because there is no volume above this, the body of this candle. All that price may do is it will break down right after it grabs any liquidity above this area. So for instance, this is a monthly time frame. If I go down to weekly or daily, you may find something within this area that may be a liquidity pool that price want to tap into and then run with it. Okay, good. So for instance, now let's look at it where the block was formed and where price actually got reversed. So let me refine it a little. A line is no more straight. Okay, so try to refine my line. All right, so now let's go down and see what actually happened. So now this is the order block I'm talking about. Now what is the definition? What makes it an order block? So after the last push bullish candle, what happens? Now when you have continuous bearish order block, when you have continuous bear candles, or when you have continuous bearish candles, or if it is not continuous, even if it's a one long bearish candle that closes below the wick, below this low, it makes this one become a valid order block. So for instance, we had this price trading all the way into this. Automatically it makes this particular candle an order block. Then to even add up to it, we had price closing down below the wick of this candle, making it even a more valid order block. Now let's see what happens. So now I've given you first criteria. The first criterion is that it becomes a more valid order block when it was the last bullish candle that actually caused a break in a structure. For instance, like I had a bullish movement, and then suddenly after the last bullish candle, price breaks down hard and destroys the structure. So for those who even trade trends, let's say they have trend and they've drawn their lines all the way this way, and they felt that okay, after they drew the line, price was actually the structure was actually broken down. So if the trend was broken down by what, this last bullish candle here, which caused a push down here to break the structure, this forms the order block. This forms the order block. Okay, this forms it. Now let's continue. This is not part of our analysis. So now I want us to go down to a smaller time frame and see how this actually played. Now let's go to the weekly. Okay, so let me go back to my monthly and frame my order block properly so that I will know exactly. Okay, so here I said was a mean. Okay, all right, in this side was a wick. All right, awesome. So let me put my let's go down to the weekly time frame. So this is where our order block was framed. So now let's see if we have this area as this continuous two bullish candles as the order block, which we saw on the monthly time frame. Now look at the wicks that you saw up here, the wicks, all the wicks you saw. So when price broke down, it was this side. Price actually broke down on this side. So let's go back again. So this bullish candle, let me put a wick here, and we'll see the reversal into that candle, the bullish order block, the bearish order block, and see what the reaction was. So actually price broke down and came all the way this way. This was the low point of that bearish candle, and price reversed into the side. Okay, so let's go to our monthly time frame. What is the first line? The first line is the body, below the body, sorry, just below the body. The lines are too big, but I want for explanation purposes. Okay, just below the body. and then the second one was what? In the mean threshold, that's the middle of the candle. Okay, now let's go back to our weekly time frame and see exactly what happened there. So now you have price breaking down and then trading back into the body. The first line was the body of the candle. So see the reaction when price traded and tagged the body, the monthly. See, what was it? It just wicked a little and then it reversed and then traded up again, traded still into the body, almost touching the mean threshold. And what happened? Another reversal. Now price trades into the body the third time, the body the third time. And what happens? Still it breaks down. Now, why did it now trade a little bit further here? So take a look at this. Take a look at this. It didn't break down the high here, but there was some highs above. There was some liquidity above this particular candle here. Price took it and then it began to rally down. So basically, when you break down an order block into a lower time frame, this is what you find. This is what you find. So now on the weekly, we find another form of order block, which is here. We have this candle, and this candle. Now if you have three continuous candles which are also bullish, and we have a bearish price form, and it breaks below the low of that continuous, down these continuous candles also form another order block. So let me quickly show you something. So the order block is not just the body of, or it's not just one candle, the last push candle that forms the order block. When you have continuous candles and then we have a continuous breakdown below them, if we had continuous breakdown, which is also continuous bearish candle that breaks below that the lowest point, it makes this one a valid order block. A valid order block. And look at it. When price traded into, already price was trading into the mean threshold of the monthly. Okay, it was trading into the mean threshold of the monthly. And what happened? When it traded close to the mean threshold of the monthly, it's reversed. Okay, so basically, this is how order blocks are formed. So for instance, with this, let's say if we had this weekly order block, how would you even determine that, okay, price is going to trade to this point, to that level, and then it's going to reverse? There are a lot of criteria to look at, and I will take my time and take you through as I share with you on this channel. Okay, but now, as we were on the monthly time frame, we were saying that now look at the mean threshold. Price traded and never even touched the mean threshold. The second time, the second week it opened, look at what the second month it opened, look at what it did. It was reversed right on the body of the candle, and then price broke down and broke down even further. Okay, good. Now, as at this point, you were considering the fact that yes, the order block has been formed. So price had to trade, came to the order block and then was bounced off. And then now it breaks structure. So now if price has broken structure, what necessarily do you think is going to happen? Price must trade back. Like I told you when I was explaining on shift in market structure, price must trade back upwards, or price must necessarily go back up to find some area of liquidity and take it before it runs, if it has to break down, before it breaks down. Okay, so now price is actually seeking for liquidities above these areas. Okay, and with me, my range for this bullish movement is, if I have it, I can't say that here. So if I have a trade running or something, my target is the body of this particular candle. Okay, the body of this particular candle. This is my range, actually. That is my range. Okay, so my range was from here to all the way here. All right, so that's my range. That's what I'm looking at. All right, so basically that is with order block. Okay, now it's sounding a bit confusing. Let me go down to smaller time frame and give you further um order blocks on a smaller time frame. Okay, so for instance, like this trade, you remember I had even explained this in the previous videos. We have continuous bearish candles trading down this way. What happened is that it is one continuous bearish candle. Now price also continues with continuous bullish candle and trades above the high of the first bearish candle here. It breaks the high. What it forms is that now we have formed another order block. So here we have something like this. Sorry, sometimes I use the wick, other times I don't use the wick. It's getting you confused. I'm just trying to delineate uh, just the candles. Okay, so this is the continuous bearish candle, and we have the continuous bullish candle closing above this, which makes it an order block. Okay, which makes it an order block. So this other bullish candle also trades high this way. Now we have a break. So this point, there's a break. Okay, so it makes it an order block. All right. So now, if you have, how about if there was only one bearish candle that caused, would that also form an order block? Okay, let me go down further and find another beautiful order block setting. So for instance, this candle, wait, this candle, is it bearish or bullish? Let me look at the open and the closing. Open was 543324 and the close was 5435. So instead of 3335, okay, so when you look at the prices too, we are moving from 51 to 52. I mean, we are moving from a lower to higher. And if we have the open to be lower than, so it means that this candle is a bullish candle. Take note. People who may see and say that this is a doji candle and whatever is a bullish candle. Okay, so now we have another down push candle. So we have another push up candles here, which closes above this high. It makes this particular continuous candles as another order block. And funny enough, this order blocks trades into this particular order block. Okay, so now any other block which may be found trading into this particular order block becomes what we call a propulsion order block. So first candle, first order block, second order block. The third order block that forms inside this second candle, inside this second order block becomes a propulsion block, because now price will move faster, or it will propel price to go further higher. So let's look at a typical example here. So we have this, and price traded, look, price traded into this order block. So this particular candle, very good. We have another beautiful order block here. So for instance, we have this candle and price closes above the high. This is just one candle, but look, when price has closed above that high, it forms an order block. And beautifully, we have the high, we have the middle, or the median, or we have the mean. Okay, that's the middle. Okay, and look at what price did when price traded. I told you it can wick into because of liquidity, but look at the closing. Price actually closed in the middle of the candle of the other block. And what are we seeing here? Price is running far away from, price rallied far. And what do we see today? When price actually traded and came and sat on the other block, look at what is happening. Boom, 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 boom. This is just one day. So you can imagine price has been propelled. So it's a propulsion block. This particular candle here is a propulsion, a propelling block. It propels price to go further. And I guess it's going to take down the highs. This is not investment advice. All right. So that is a typical order block. How this is how order blocks are formed. Okay. This is order blocks. So my first point that I gave you was that, for instance, when there is a shift in structure, So for instance, like this side, there was a shift in market structure. So this high here was raided, was broken. There was a high here which was broken, which made this particular continuous order block or continuous bearish candle become a very strong. So not just only the last one, but this one, they are continuous, the same bearish candle. So it makes this continuous bearish candle become a strong order block. Okay, because why? I give you my criterion that it has broken a structure or market structure, it's broken a high. Okay, which makes it a strong order block. This is where the institutions are buying. This is where the smart money is buying. Okay, yes. And so any point that you expect price to retrace. So for instance, like if we are on a smaller time frame, if price retraced into the order block, you place your trade, you put your stop below the low. I mean, this is daily time frame, but you can filter it down and go down to smaller time frame and find beautiful order blocks. So now let me go down to the H4 4-hour time frame and show you more beautiful order blocks as they formed. So for instance, so can you see this? You have this candle here and then this candle here. What do you think it has formed? And we have bearish candles breaking all the way up this way. Beautifully, we know that this is a very solid order block. Price trades to it and look at what it does. Goes up. Price trades to it again. And this is a clue. When price traded into it at this point, it was a good entry point to enter. Put your stop below this point. This is an order block. These two candles, bearish candles that traded lower and had the bullish candles trading above it, is considered as an order block. Beautiful ones. When is the order block considered invalid? To me, when is the order block considered invalid? Well, if I have price, so look at this. If we are considering the high of this, the wick, if we are using the wick of this bearish candle here, all the way to this point, to the wick, look at where price got reversed. So if you had entered a trade here at the main threshold of these bearish candles, including the wick, look at you entered a trade on this area, look at your drawdown, something little, and boom, you are here. It comes again, boom, you are here, and comes again. I'm not talking about fair value gas. I'm talking about order blocks, solely order blocks. So this is an order block. You get it? It's so beautiful, so beautiful. Are other blocks formed at some particular point? Yes, they are. I'll especially consider other blocks to be formed at a particular point, especially where we have market taking down certain lows. So for instance, like this point, we had market raiding this equal lows here, relatively equal lows here. Market raided it, and what it formed here is a beautiful order block. When market sometimes also when they dip into relative lows, when they take so this side they had taken the sell side liquidity here, ran up with it, you are likely going to get this. If it dips sometimes into maybe a fair value gap, you are likely going to get it. Okay, so for instance, this order block, when we had this continuous two bearish candles went deep into this particular order block, we had a fair value gap here. Now price dips into it and then rallies away. What do you think price has also formed here? Possibly another order block. So let me show you. Let me go back and give you more picture, a clear picture. So price trades here. Price managed to trade further into the order block. Sometimes this is what you get. Price would not trade just and touch here and go back. It will trade further deeper into the order block. Okay, and it rallies above it. Even to be more specific, when you look at the bodies of this particular candle, they touch the main threshold of this candle here. Although they didn't pay respect to this first candle, but they paid respect to this second candle. What happened? Boom, they traded. You could see how they were weakened. The first one weak, the second, the third time it should give you a clue that price actually wants to. So you pick price from the bottom. So for instance, like this area, how can you frame and say that okay, we have entered into a zone that we could literally be bounced off. Now let's go down to 1 hour time frame and see if we can find a beautiful order block here. Awesome, is here, it's happening. See, we had another block here. Price traded above. Did they do that? No, I'm not seeing it well. Okay, so I don't consider it because price didn't trade above the highs here. Now let's go down to 30 minutes time frame. And it was beautifully delivered on the 30 minutes time frame. So we had this continuous bearish candles, and then we had this long bullish movement which closed above this, making this particular area an order block. Okay, good, good. So this was an area of order block. We had traded into another order block. And what did we have here? What did we have here? Okay, let me use the wicks. Let me add the wicks. Okay, what did we have here? What did we have here? Price traded and came down into this, touched the body of the candle of the wick of the last bearish candle, and boom, it traded up. And then here we go. Okay, and you could have even entered a lower minimum entry at around this level. I'm not teaching that today. All right, I'll teach in another video. So basically, other blocks, you should look for them. So for instance, my first point was that when it breaks structure, you are likely going to find other blocks. So look at this. We had price trading up, from up came down, up dropped, and then boom, it broke this high. So possibly there could be another block somewhere hiding here. And beautifully, we had this last push candle and all this continuous candle, and we said that this continuous candle is an order block, and price traded into the last candle here. You could have placed your stops below this candle, and boom, here we go. If you're going to use the minimum lot, how much are you going to make? By now you should be in profit of about $45. That's a minimum low risk entry. All right, so basically that is the definition and how to spot order blocks. So basically I've taken you through the bearish order blocks. The inverse is true, or the inverse is the same. Okay, let me take you to another pair and see if I can show you something nice. I took a trade here, but I just didn't want to stay in the trade for long. I can't show you the lot size that I used. So for instance, we had a bearish movement here. Price was trading down, high, low, high, low, high, low, high, lower low. Sorry, so we have lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. And then how happens? Boom, price trades above this high. Then automatically we have what? A break in structure. Okay. For those of you who don't understand a break in structure, market structure, go to the videos and you'll get them. And when you had a break in the structure, what happened? Price retraced. Price retraced where? Where can we find the other block? We have a bearish candle here, and price trades high above it. So now this forms the other block. So let's see. The price trade and touch it. Oh, beautifully. It touched just the body. And where did I take my trade? I took my trade here. Boom. And I wanted to take off from this point. This is one of my accounts. I mean, the small account. But I took off another one on the high. This point. That is where I took off the high. I took off here because I want to take off my profit at scale off on the highs. I knew price was going to shoot up above this high here, but it was okay for me. So basically, these are other blocks. You know how this is volatility 100. You know how the movement is very sharp. And the pips are very wild. All right, guys. So that is it with other blocks. You can find them everywhere on each pair. This is 5-minute time frame, and you can imagine if I had placed my stop below this and taken profit around this area. It's so easy. It's so easy and so easy to do. Okay, so guys, I wish you all the best in your trading, and have a blessed and a fruitful evening. So if you have any question, you can comment in the comment section. Those of you who are new to my channel, please subscribe, okay, because I'll be posting new content, and what I'm going to do is I'm going to share with you from scratch those who don't know how to trade, especially volatility index. Okay, volatility index, especially synthetic index. This synthetic index, some of you say that they are fear barometers, and they are not. I'll take my time and explain very well. Okay, so please subscribe to my channel and just stay in tune. I'm going to take it from the scratch, and I believe you are going to be a better trader. Okay, and you are going to enjoy trading very well. So do have the best of the day, and